Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, as you can see, the Australian dollar, although it has broken above 70 cents, the technicals are somewhat wavering after finishing last week on firmer ground. However, momentum appears to be more restrained as markets look towards the next major catalyst, which is the non-farm payrolls report this Friday. Domestically, though, the latest inflation figures were softer than anticipated last week, although the RBA has played down the broader significance of the result, with Assistant Governor Sarah Hunter indicated that much of the moderation reflected low oil costs rather than a widespread easing in price pressures, with inflation still running above the RBA's target of 2 to 3%. This has helped limit the negative impact of the softer inflation reading on the Aussie. However, with the calendar slightly light this week for Australia, the market will remain on the US data. The forecast for the non-farm payrolls comes in around 88,000, with the previous number of 57, while unemployment is expected to remain at 4.2 and likely to see no change there. But the technicals are wavering. I'm a bit concerned about these candles. So the top side, although the call is 71 cents, there will be a hard grind towards this target and may see many dips towards the region of 69.5 and reassess. A very whipsaw price action in the two-day session when it comes to the euro, but still maintaining above 115 and could see that challenge of 115.55.65. But I feel limited beyond there unless the dollar sinks further. It's around 99.7 or 99.70 and may see further weakness since the plummet from 101. Overall, though, the bulls are dominating the factor here, but the challenge towards the top side is appearing to become difficult. So we may see some more whipsaw price action and dips towards the lows of 114.25 to 45, but still overall, as you can see from this dragonfly doji, still determined to gain. Dollar yen remains highly volatile after collapsing from 163 last week, with intervention efforts driving a sharp recovery for the yen. Dollar yen has extended the decline through my target of 158 to 155.22, which is back here seen in April-May. So with the target exceeded below 158, puts me in a neutral bias, as no doubt with all these candles wiped out, which was the fear, as previously seen here. The market does get very aggressive on interventions. They are likely to see a lot of store bulls and therefore may see or time now to reevaluate. When it comes to sterling, the market looks somewhat whipsaw, but still contained by that 135.15.35 level. I still like the way the pattern is attempting to break higher, but like previously, the demand reversed sharply, so still be on your guard if you're trading from a bullish side. Turning to commodities, the upside call still there to around 4,155 to 75 since the break of this trend, although it has been trading sideways. The technicals are picking up on the RSIs. We could see that pop above 4,100, and let's see if we can maintain the rally further. And oil, well, the market dropped 6% after wiping out the gains from the break now of 78.60, which has also left me neutral. The market's just too whipsawed, and I'd rather refrain from any call. But the RSI and the MACD is breaking down, so keep an eye on that. That's a wrap. Thank you for joining me. As always, look after each day, Paul. Hope you enjoy the great start to the new week.